So let's unpack this call a little bit, particularly the fact that you're going overweight U.S. equities, because this is coming at a time where international stocks have done so much better, and people are wondering, is it time for U.S. exceptionalism to end and international to kind of resurge here?
Yeah, so if I take a step back, at the beginning of the year, or actually the last couple of years in particular, we've seen U.S. markets do exceptionally well. And so people don't tend to move away from what's worked really well unless they have a catalyst to do that. That catalyst really was Trump taking office, and particularly the emphasis on tariffs. As that happened, people started to move to international markets, even to the US, even some money flew into China as well. Now, what we believe in the last kind of 6 weeks or so is that things have changed dramatically. For instance, a lot of the big risks are probably a little bit behind us. For instance, if you think about the tariff situation, we're not talking 60, 75% tariffs anymore. We're talking 10% with some selective, 20, 30% on certain regions along the way. So that means that that tariff risk is minimized, not zero, but minimized. And then when you look ahead, you've got some potential deregulation, the tax cuts coming through. The market's confidence levels is also not so bad. And what people were expecting was a significant drop-off in the US economy. Just hasn't happened. So for us, it means go back to what we were believing earlier, which is that the best companies, the best earnings, the best momentum still resides in the US, and there should be a bit of a catch-up now between the US and Europe heading into the end of the year.